Oh
Yo,
man.
can you hear me?
Yes, sir.
All
Seems
right.
like it's been forever.
Yeah, it has. It's been about a week. Apologize. Been super busy here, so unfortunately. So
Oh man.
let's dive in because I got some stuff to do this afternoon as well. So we'll
Yeah,
get
man.
started as
That's what
fast
I
as
was about to
possible.
say the same thing.
Try to work through this. My speaker's a little funny here. Change it up a little bit. All right, so let's take a look at some of the stuff that I think it was about a week ago, the last time that I was on. I know you've done a couple podcasts since then, but since that time, we've had some pretty interesting stuff start to happen. We've had a little bit of a bottoming happening in the market, starting to get that little push back up. That I mean, you kind of know that was coming eventually. Nothing goes in a straight down line. And I think we've talked about this level a lot here, this 5808, which was the breakdown area from that large consolidation. Guess where we're at? We're right there right now. So not a shock. The ranges are starting to shrink a little bit. Today was our smallest range we've had in, probably a month. Now that I'm looking back at it, it's been a long time, since February 18th, maybe. That's about the closest one. And that was right when we were starting to top. So yeah, I mean, over a month, most of these ranges that we've been seeing have been, 80, 90 points, something like that, and today we were, what was it? 35.
35,
Yeah.
I think it was somewhere.
Yeah.
Yeah.
So quite the come off on there. So things are slowing down a little bit, but we're at, like I said, we're at that decision point there at that 5808 zone that we have set. And the other thing, this is our anchored VWAP from the top. It's also right around that area as well. It did break out of that, went down and held it. We'll see what happens, I think, over the next day or two. If we get a close back below this 5808, it could be go time again for the bears to start pushing down for another leg. Otherwise, we might continue back up here a little bit. One other thing, let's take a look. Here's the 200-day moving average. We're back above that too, and that's a big level that a lot of the larger traders look at and kind of make that a judgment zone in the market if we're bullish or bearish. And we have closed back above it now twice, so the jury's out. There's definitely a chance, that we, maybe the bottom is in for right now, but to be determined. We won't make that call. We'll let the market make the call for us. I think today we're going to do some levels. We're going to look back at some of those swing trades that we discussed last Tuesday when I was on, see how those things worked out, and we'll kind of go from there. So let's start with those swing trades a little bit. So first one we had was the healthcare fund. And this one was the one that won on the first day. We got a big pullback in healthcare today. Not positive what's driving that. I know there's been some shakeup in the CDC a little bit today. That may be something that's doing it. The other thing could be there's some talk of healthcare ads maybe ending on TV, which I think maybe could be messing with it a little bit. Healthcare is not going to have as much pull as they've had in the past, I guess, without being able to set those narratives. So, that could be something that investors are getting a little bit worried about, and hence we sold down a little bit on the healthcare. We are back in the zone again here. If you wanted to make some kind of retest buy, if you thought we're heading back up, this would have been the spot to do it. We did close still above the zone, so it's not totally dead. If it went below this 143.30, I would probably be looking more on the bearish side at that point. We would set a new zone. And actually, I think they work out to the same thing. So our stop would be, if we were short here at 43, our stop then would be above the 45. But for now, we'll still say it's bullish. And this was one that actually won on day one. Any thoughts on that at all?
No, that was a good one there.
Yeah, that was an awesome one. That was nice and easy. Technology fund. This one I had set up with this charts. All right. So this is something I actually just set up the other day. And I was going to show it today. We had this little kind of W starting to form here on it. You know, obviously we had the high here at 217.47. Set the zone with our 1 hour charts. So we went back here. We had these little highs here. So this would be our stop zone right in this area. We came back above it today. I think we would be targeting then for 2 times that, which would be, set this up, 217.53 minus 215.67 times 2. So we'd be looking at 2. About 221 is what our target would end up being on this if we took this one. Technology is starting to make a turnaround. We can look at the actual individual stocks in there here in a little bit if you want, but we'll put that target on there. So we'll see where this one ends up.
Okay.
Another re-entry chance I bet on this one tomorrow, so around this area. We get a little bit of a pullback, and you can see the post market is actually slipping down a wee little tiny bit. So we'll see. I wouldn't. There's a gap here. Wouldn't be shocking. You know, if we try to pull that a little bit. Maybe this is like half gap here as well. So we'll see what happens with that. But if you're long here, this is what you'd be looking at: 221.25. With the stop at 215. If you wanted to be a little bit more, give it a little bit more room to work, you could actually use this gap now, and then you would take this amount here and double it, which would probably put us right up around this next level of interest here, which is the breakdown from the consolidation on. We had the big consolidation zone here on technology. So odds are it's probably going to maybe head back up, try to test that again. If it does do that, the overall market is probably going to keep going up as well, since technology is the biggest driver of it all. So be on the lookout for that. But there is a nice trade actually setting up right here, right now for this one. So beware. Let's have a look. I think the financials was the one that we actually said we were going to follow really closely, and this worked out perfectly. We broke out. Spent a couple days, 1 day basically, and then we hit the target. Actually, it came just short on this March 19th on the Wednesday, but the next day it hit it then. So pretty easy trade there. That one would have been super simple. You had everything going with it. You know, we had our nice little bottoming pattern with this consolidation here. We broke out of it. We had our anchored VWAP moving up with the trade, you know, and just nice and easy right to it. And now look where we're right at breakdown from the upper consolidation. So that is definitely at an inflection point. If you wanted to get short on this now, it's a little bigger. So I would probably set my zone. That's ironic. You would set the zone right in this little area. For me, it would probably be here to there, which is funny because the highs from today were almost right at that zone. So if you were setting up a little short, your stop would almost be the high from today, and then our target would be 53 minus 50.30. It's about 23 cents. 46 cents is what we'd be looking at. So 49.84, which is funny because that was almost right where our other target was. Doesn't always work out like that, but that was kind of funny. So this would be if you were going for the short side on XLF and you wanted to use the zones. You know, you wait for the breakdown again tomorrow, and this would be your target. So 50-50 actually pretty trade. So if you're still thinking on the short side, you don't think the market's done selling yet, this is definitely an opportunity for you. You think the market has made a turn, probably wouldn't take it yet. And then you could wait a little bit, and you could actually play this on the opposite side as we break out a little bit higher out of this zone. So to be determined on that. Any comments, questions, thoughts on it?
Mm-mm. No, I think that's a good one right there as well too.
Yeah, absolutely. All right, let's go back to our daily. Have a look at energy. Set this. Okay. So another good one here. This is where we set it up last week. It actually broke out late in the week. So we set this zone on Tuesday based on this Monday area, basically, the Monday high. So we broke out on Friday, and we really just continued all the way up into that next zone that we have set up here, which is perfect. Honestly, it came out well. So another one, so far so good with these swing trades on the daily charts. You could have made an argument maybe to make this zone a little bit smaller, maybe like that, if you wanted to do it. But if you wanted to give yourself a little bit more room to run, you could use the entire consolidation zone that we have going on there. On the short side, it would be just like how I set up that last one. We have our zone here from January 17th. Set up on our hourly. If we start to break that back down, we're probably heading back down into this little 90 area is what we're looking for then on the target. Energy sector, you want to pay a little bit of attention to oil and how the oil prices are doing. Usually they'll move around, with the oil some. So keep that in mind. There is something that drives energy that's a little bit extra. You to keep in your thoughts. Any comments on that one at all?
Mm-mm. No, okay. Pretty easy.
Good. Let's back out again.
Swing trades.
Swing trades are, I'm normally a day trader, but I'll tell you what, this keeps kind of working. I might turn into a part-time trader here soon.
Kind of make you do it, because these trades you don't really have to watch like you do day trades.
You don't gotta watch them. You can swing. Honestly, you can swing much larger positions doing this.
Yeah,
there's a lot of big benefits to it. So we'll see if this keeps. Like I said, I did a lot of back testing on it before we kind of started presenting this, and it looked good on the back test. But like I said, I've predominantly been a day trader my entire trading career, so I haven't really tried to put my strategy to the test on a longer term as much. But so far so good. What are we, like 3 for 3, 4 for 4 here? Which is crazy. That's not completely normal by any means. But
also, to be fair, I don't know about you, but since we've started, I've been going crazy anyway. So just everything. So it's kind of
yeah, the wide ranges like really, really help a lot. I mean,
it helped a lot. We got into a good range, so everything has just been pretty spot on.
Yeah, yep, just makes it easier to. You have more leeway that way, and it's easier to see the trend too.
Right, it's super easy. These couple days is when you really want to test everything that you're doing.
Yeah.
Yep. To see.
So let's say we wanted to do a short. These are the industrials here. If we wanted to do short side on this, I would probably this high here. Set our top there, bottom probably. That's already low. If I can get it, there we go. So short side, if we wanted to do it, we would enter on the break of 133.83. Let's figure out where our target would be. And again, I don't think any of these I'm like super comfortable with, just because I don't know where the overall market is heading at this point. I think
okay.
It's a tougher call. I mean, it was pretty obvious that we were going to get a bounce there at some point on the larger market, just because of how much we sold off. So that's another reason why these swing trades work so easily. At this point where we're at that inflection point on the larger market, might make it a little bit tougher, but let's see what happens. 134.95 minus 133.80. That gives us $1.15. We'll multiply that by 2, so $2.30. So we want to subtract 133.83 minus $2.30. So that would be 131.58. 153. So we'd be looking like somewhere down in this area-ish. Not close enough. So that's where we'd be looking if we're looking on the short side of this. So stop would be above the high from today, and then target down here at 131. Entry would be on the break of this candle. You got a nice little gap here, which if we start to break this, odds are really nice that we could at least try to fill this.
Yeah.
Yep, exactly. So if you want to do some scaling, this would be a nice point to do some scaling. You can maybe scale it like mid gap. So for me, a gap is, I would go from the top of the prior candle and then to the bottom of the next one. So this would be our gap, actually. And so half gap, you just basically add the two together and divide them by 2. Bam, you'd come up, so it'd be somewhere right in that area, to 132.69. So you can maybe take a wee little bit off there, which you could almost get your trade probably to break even then at that point and let the rest run for just pure profit. Especially when you're not positive what way the market's going, it's a great time to do some scaling, and this would be a great area to do it with the gap there and the mid gap. Something to think about there on that one if you're interested. Any thoughts on that one at all?
No, I would definitely scale, especially with that gap. That gap would have me nervous not to scale.
Yeah, I agree. Because there's a good chance that it bounces right here at that 132.32, like a very good chance that it would bounce there. So at least for a day or two, which is going to just put heat on you, and then you're going to be upset about it. So. So if you scale out a little bit, then you don't really care as much. You've already locked in. At worst, it's a break-even trade. Something like that. On the upside, you can do the opposite. If you wanted to play the top side, I would probably rather see this gap fill first, honestly, before I would try to take the upside. But you can make an argument for it. Say we chopped around here a little bit more, maybe go just below tomorrow and then come back above. You can make a definite, especially if you see the overall market moving in that direction. Industrials, hit or miss. We got a lot of the tariff stuff going on, which hits industrials directly. So, and helps industrials directly too in some instances. So it could go either way on that one. But that's kind of how the zones would set up and how you would take it. So our last one here then is our consumer discretionary. Now this is an interesting thing that's happening right now because a lot of times consumer discretionary is a safety play. So if people are getting a little bit worried about the market, they'll start to go into consumer discretionaries. It's like your toilet paper, your everyday goods that a lot of people can't live without, essentially. So it's an easy place to run. Like if you don't like using gold, a lot of people will run to this for safety. But you see that it's really popping off right now, which is kind of funny with the market moving up. But we'll see what happens. So if you had taken this little zone here, which was set up off of, that would have been that Tuesday before. So yeah, this would have been set up on our last meeting that we had here. If you would have took this, which you would have had a definite opportunity to be opened right here, came up above, you would have already had a winner. Honestly, it would have already won today. That's 2-1 for sure. So not bad. Swings look good so far. We'll see what keeps happening with them. Is there anything else you want me to look at on the swing trades at all? Do we want to look at any individual stocks or anything? We'll go back to the daily. Or you want to just dive in? What is it, 435? We can dive into the our big three. Knock those out.
Yeah.
Okay.
Let's knock those out. Then if we wanted to talk about one or two, then after, if we have that time.
That sounds good.
Yeah.
All right. So back to our daily here on the ES. Obviously, you could have played a swing trade here as well. We had a nice zone that was set up on that Monday. It was based off of Wednesday the 12th. That high there, we broke out from it. You actually had 1, 2, 3. You had at least 4 tries that you could have got in on this long if you wanted to. It held our zone bottom every time, which is perfect. bounced right back up, came into that key area, the 5804, 5805. And that's where we sit right now at this point. I think for me, obviously, I'm not going to change any of this. I'm going to leave it as is on the daily. I kind of want to see, can we penetrate this 5848? Wouldn't be shocking. Maybe we come up above a little bit, chop around some. We've had a decent move up here. It might need a wee little bit of back testing, but we had the large sell-off, so it can do anything at this point, unfortunately. So just be cognizant of that. Let's have a look. Let's drill it down a little bit. Let's look at some nearer term levels. All right. So today was a straight chop fest, unless you got in very early, which I did not, unfortunately. Most of the trade was already done by the time I started trading. So it just kind of chopped around this one level that I had here at 58.25. I think for tomorrow, obviously, we'd be looking at the high from today, which would be 58.37. You don't have a ton of room to run on that, but with ranges starting to shrink up a little bit, not the end of the world, I guess. We can definitely get the push up in the 58.50 area, which gives you 13 points to play with. That's not the greatest, but not the worst. It's definitely something that you can deal with. It's tradable. On the downside, you can make a little bit of an argument for the 58.09, which sort of coincides with that daily level that we were talking about. I think for me personally, though, I'm going to wait for this 57.94 to break. I'd like to see it break and then get retested and then start heading down. That'd probably be what I'm looking for there. Let's zoom her in just a touch more. Yeah, like I said, we'll put a yellow zone here. This is not something that I'll trade, but we'll put it there just for visualization purposes. You could also, if you did some kind of failed breakout on this trade, this would be a nice target for you on the downside. Let's say it came up above a little bit to 58.45 or something, starts to peel back under. You want to get short. This would be a nice spot to take your profit somewhere around this little area here. Did you have any additional levels that you were looking at on ES at all?
No. The best one for me is the I want to test that 57.98 area, in there, that range. That's 57. What you got? 94.
Yeah, 57.94. Same, close enough.
Yeah, they're in that range. That's the better move for me. Of course, I like to go off the better moves, but that's what I would like to see, us get back down there and see what happens. And then if it pushes back up, I'll definitely be in on that. Or, it breaks lower, then we got a little bit of breathing room to the downside. I like the bigger moves, the bigger plays. So that's what I like.
Agreed. And you could even do something like this if it comes down. Let's say it comes down to your 57.95. We could actually use this level down here at the 58.09. It's sort of like a reclaim. It comes down, tests here, starts to come back up. You could almost use this as an entry then. So we'll leave that level on there. Just it may become tradable if that happens. So I'll leave it there for now.
Because it's all about risk versus reward. So
absolutely,
a lot of these are good trades, but
right. Listen, you can't really predict what way the market's going to go. The best thing that you can do is give yourself the good risk reward, set the odds in your favor. We talk about that every time we're on here, and that's what we're looking to do each time we take one of these trades. We're just trying to put the odds in our favor, with the risk reward, give you more upside than downside. And you really don't even have to be, you could be under 50% and still make money. So
right.
It's a math game at that point. All right, let's have a look at the CO.
My love-hate relationship.
No, so we came down.
Was fine today, though.
I didn't do anything on it today, but could have, I guess. Kind of the same deal. We had a lot of little chop here on this little zone. This actually probably could have been our first loser on a swing, really. If we took this next day breakout on that Wednesday after we talked about it, and it came down with. But you could have re-entered again. You got another shot at it. So if you're getting 2-1, what's it matter? Take one loss, then get 2-1 on the next one. You're good to go. Coming up into this little breakdown area, $70 is always a nice. The big hole numbers are always a big key area for the oil. So not going to be shocking at all if we continue up, test the 70 area, and then we'll kind of see what happens with it from there. A little bit. 2 hours. See what we got. So there was a perfect retest trade today that I missed because I'm an idiot and I wasn't paying attention. I think it happened. Let's see what time it happened. I think it happened.
Don't feel bad. I didn't.
It happened at noon. Like, I don't really even trade around noon, so I mean that's really the reason I wasn't.
Yeah, exactly.
I wasn't even at my desk watching, so it is what it is. But it would have been a perfect little retest trade that went down. But let's get back out here. So we will zap that level out. It's dead. We have the 69.75 sitting just above today's high, so I'm not going to mark today's high as anything. We'll use 69.75 as our upside area. Let's zoom into the 30-minute. There might be something of interest here. If you wanted to do something overnight, you could maybe make a little argument for the high here. I don't love that at all. I got to be honest with you because we got this little down move. We're about 50% back on that move there. It's tradable, but I that's not something for me. I don't know about for you.
I mean, no. I mean, I would be watching. It would be tough because once again, I guess. And it's all really for me. I just don't like the risk versus the reward on that trade. So
okay, I agree. Yep, I agree. Yep.
It would have me a little. So I might would pass up on that one, but I got that level. But when they're like that, so typically, and I don't know how other people look at it, but typically when I have a level like that and I see that the risk versus the reward just doesn't add up for me, I use it as more of a gauge of, okay, are we breaking above it? Are we breaking? Is it holding and we're breaking below it? And now I can kind of look to gauge,
Yeah. Kind of take the temperature on the market, essentially, of how it's working. Yep. I gotcha. I agree. Yep. The downside, obviously, is 68.52 is the big one. We got this nice tail here. It's trying to push up. If we come back down, take that out. Good chance we head a little bit lower. There are some levels down here that might get a little hairy in, just because we are still in that large consolidation. So these things can bounce anywhere. That's the tricky thing with oil right now. But 68.52 would be my big downside play for tomorrow. If we start breaking below that, holding, maybe come down, come back up a little, break it again, that'll probably be my entry for that. And then I'll probably look to get to like the 68 area, which is 50 cents, which is a very nice, 50 ticks is a really nice move. So that's probably what I'd be looking for on that one. On the upside, as far as the target goes, we'll go back up to 2 hours. See back a little further. On the upside, you could look at, we're coming into that 70 key, which is going to be, that's a tough trade at the top, honestly, with 70 sitting right there, because you're going to get some selling right around that area. It's almost automatic. Be cautious with this 69.75 level for sure. Things could get hairy. If we can get above that 70, things will be looking
It'd be sweet.
Yeah, but
it'd be sweet.
Yeah, we could get the breakout and it could come right back to your area. That would not be shocking at all. So keep an eye on it. So probably, man, oil is a tough trade tomorrow. Honestly, I don't know if I'll even touch it.
I'll be honest. That's what I was gonna say. I don't even know if I'll trade oil. It just all depends on, what it does.
Yeah.
I mean, I would love for it to break up.
We also have the oil report tomorrow at 10:30, which could change some stuff. If there's a surprise in there. That could spring us up or spring us down, which would be nice. That would break us out of some of these areas. Maybe open up some really good trading lanes for it. But for now, be cautious with oil. We'll see what happens.
Yeah.
I guess today's theme is be cautious. Let's have a look at the gold. So what do we have? So this is our
technically grinding on up,
Technically grinding on up. We had our little swing trade set up here. Hit our target. I mean, we just went with the trend. We didn't do anything special there. No big surprises there. So, you'd be looking at this top side high of the day. 3,065.2. As far as a daily level, we still haven't retested this 2975. So if it does want to start peeling back a little, this little zone might be a really nice spot for a longer term, for like a swing gold trade. We come down into here, we break back out, you enter, and then do your 2 to 1, and it would be somewhere probably right in this little area, which isn't even quite to the high. A lot of times when it tops, it's going to do some sort of like double topping pattern. So the odds are pretty good. It comes down here, it will come back up a wee little bit. There's a nice little trade sitting there for you on a swing time frame. Let's zoom her in a little. This looks so much different. It went from looking like super bullish on the daily to this, that you're getting like this chop action that's starting to happen, and you're getting the lower highs, lower lows. So we are starting to get that pullback. So for me tomorrow, I'll probably keep this level at 45. If you want to be aggressive, you could use the high from today at 42. I'll just keep 45 on there for myself. Zap that out on the downside, since we are starting to sort of work down. This will be more clear in the 30-minute. Yes, it is. So we will plop downside level here. It's 30,023. 30-minute low level. Shrink this down so it doesn't look as important to me. We come down below that. You do got a couple of lows here that it's going to contend with. But overall, the short-term trend is actually down right now on gold. So this isn't the worst trade in the world if you take it. You can at least give it a shot. Upside, obviously you're 45. If you want to be super aggressive on gold, you can maybe look at this 3,031. What do you think on that?
Oh yeah, I would take it for sure.
Yep. Okay.
Oh yeah.
Because I mean, then you're starting to get a little like W pattern happening there. So pop that in there. 30-minute high. So yeah, if you want to get a little aggressive, there's some definite gold plays there tomorrow that are reasonable to take. Did you have any other levels you were interested in on gold?
No, that's about it. I mean, of course, I would love for it to break this 30-31 area and then start up to the upside. If not, and say it can't get above the 30-31 area, then I would be looking to the downside and I think I mentioned to text you this, the 30-17 area. That would be a nice play, but I feel like because I'm talking about it, it's going to happen overnight. That play right there, so I'm not going to get any of that.
A lot of the gold moves has been happening. This little low right here.
Yeah,
for me. It's 3018. So, but I think that's what you're referring to there. I mean, you could even
Because
This will
even
probably
the
be
11, I got 3011. I have that as a level, which it literally kissed it this overnight and then pushed all the way up to that yeah to the
there's a
30.
lot of little tail lows there that you could play off of if you wanted
Yeah.
to. But this is the most aggressive one here. This is probably the safest one, I guess. This 30, the 30,018 that you're talking about. Just kind of looking at how the pattern's forming up. Just comes down. That's probably your safer one right here. I'll stick it out as yellow just so folks can see it. But if you want to get a little bit more aggressive, which this will probably be like 3023, and then I'll probably scale out a little bit, around the 3020-ish, maybe break even, and then we'll see what happens from there on it. You're fighting the longer trend as we just showed the daily, so be cautious with it once again.
Yeah.
I got about 9 minutes. Do you want to look at any individual stocks at all? We can just do a quick. Haven't looked at any of these, but we can see what we see, and we can look at NVIDIA.
Well, I know. Let's look at Tesla. I know people have been asking me about Tesla. With all the news around it, everything going on there with Tesla. So, should we buy? Should we buy? I'm like, buy the dips, man. Buy them dips. But
tough call. There. There's some obvious. Like this is a naked chart, so we'll just kind of build it out how I do it. So boom, we got a low there that's obvious. You can actually make an argument back here for this one. That gap has been filled, so we're not worried about that. You also have a high that was broken right here. So this would be looking for a retest, so we'll make it purple. So if we start to peel back a little, you can do something in there. Let's set the zone for it just to do it for folks. So for this one, if you want a tight stop, you could use this little low here on that candle. I think just because it's been a pretty volatile product for me, I'm going to set it on this low from Thursday at 11:30. So if we came back, we retested, then we'd be looking at our 2-to-1 from that, which would be 251.84 minus 233.06. So it's $18 times 2, so 37.56 plus 251.38. So about 280. Where it's like almost where it's at right now. It'd be 288.94 is what you'd be looking at for close enough. All right. So yeah, it's almost like exactly where it's at right now. So retest basically means we'd be waiting for it to come back down, retest the breakout area. There's a gap down here. So if you come back down to this level here at 252, I think I would want to see the full gap fill, 249.80, and then wait for it to break back out there. And then this would be your target. Stop would be down here, based off of the hourly chart. Let's zoom back out to the daily. So some obvious things that are sticking out here. This is our big consolidation that we had at the top, right? So we want to definitely have a purple zone there. And then we had another little zone that happened here. So there's another breakdown level right at this point. So these are going to be probably those main resistance areas that as Tesla starts to come up that you're going to want to keep an eye on. Then after that, we're obviously getting into breakout areas. So this guy there. This guy here. Central top high. set it in case somebody wants to put, like, if you think Tesla still has some downside left in it, which it may. This is probably how I would set up this trade. A little bit more so we can actually see. So you got this little consolidation area right here. You can make an argument for this little. I think on the if it starts going down again, it's probably going to start flushing. So you could probably be a little bit wider on your zone and still have area to play with. Sorry about that. So this would probably be our zone that we'd be looking at. Let's back around again. So if you wanted to short Tesla, this might be a decent spot. This 326.47 with the stop of 338.84. You can make a little argument for this high here at 303.99. Again, it's going to depend on the larger market. The Tesla is one of the big drivers, so if you see the larger market going up, you're probably going to see Tesla continue to go up too a little bit. But okay, I think those would probably be your next closest opportunities. Do you see anything else that you would think about on these higher time frames?
No, that looks.
Like I said, you can make an argument maybe just short
right here. Yeah.
It's 303. Definitely can make an argument for it, especially if you see the market kind of flip in and Tesla's up around there. Not the worst trade in the world. We'll put the level on just for shits and giggles. Consider that. It's more of a breakout zone. But all right, so you could do something like this. We come back up into this like 295 to 303. You see the market softening a little bit. You could short it at. Ideally, it would come up and break this just a little bit, like maybe like 310, and then it starts to fall back into this zone, and then you break the bottom of it. That would be like the ideal setup on this. And then from there, you'd look for your 2-to-1 to the downside instead of the upside. So. All right, man. We are at 5 o'clock right now, so unfortunately, I have to get out of here. I think tomorrow I should be good, so I'll be back on tomorrow. Thursday might be a little dicey, and then Friday I'm out. So, so I apologize to folks but they're trying to follow this daily. We're busy guys, unfortunately, and this is like one of the busiest seasons of the year for both of us. So it's going to be a little spotty, but with these swing trades, these last a week, as you see it, a week went by, and some of those trades are still working now. So it's a little bit slower. So I think we can get away with not doing it every single day. And I think it's hard for people to follow day trades anyway that's not a day trader. So this, I think, works better for
it's
for a larger majority of people. So we'll be back tomorrow. We'll kind of see what happens. Hopefully that inflection point on the ES will have a little bit better idea of what it wants to do, in the longer term. Whoops.
Don't you hate when that happens?
Yeah. That's my day trading chart. Looks way different than this swing moon here. So yeah, hopefully we see what happens with this zone right here. This is the key. So that's what I'm going to be watching for tomorrow. So all eyes on it. If we can, break out from this, hold this level, maybe come up, test back down, hold in this zone. There could be more upside than on the horizon. On the flip side, if tomorrow maybe we poke out of this zone a wee little bit to the top, and then we just start to rain it out some. We get back below 5,800. I don't think the bears are done yet. Then, it was just this is really just short covering. And at that point is what it'll end up being. So all eyes on that. Let's get after it tomorrow. Good luck, everyone, and we'll get back at it tomorrow.
Hey, clock them ticks.
That's right.